Hey, good morning, San Diego. It's Jesse back with a Tuesday edition of Foreclosure Friday. And what I want to try to showcase this Tuesday for you is have a little fun with the 2 for Tuesday concept, in that we are going to pick a duplex today. Duplex right now in San Diego County, for so long they've been out of reach. The amount of money it takes to actually grab one of these things. The only people that actually own them were the old land barons, basically, who had got them at the last real estate downturn and got in at a low price, able to make the rent substantiate themselves. When the prices ran up in the last, 3/4 of a decade, it was impossible to grab these things and have it make any financial sense. So it's really exciting in this new marketplace to have the cost of the duplexes lower to a point where you've got first-time buyers even coming into the scene and scooping up on a duplex or a 3-unit and being able to have the other 2 units almost compensate for so much of the mortgage that it's almost like they're just paying rent again. And not to mention, you've got an asset that's appreciating much faster than just the standard single families, townhomes, and condos, for sure, because it's actually an income-producing property. But there's a lot of moving parts. So I want to try to showcase this hot bank-owned home of the day, in one of my favorite parts in the heart of San Diego, which is called North Park. And as the name suggests, it's just sitting right on top of the famed Balboa Park, and it is a mecca for all kinds of homeowners. First-time buyers, there's tons of opportunities for condominiums, townhomes, and low-priced single families. And then also, it's a thriving rental market. So if you have an opportunity to get in on a duplex, this is an amazing spot to be able to do so. Now, this little property over here on Ray Street, it just came in under the radar right before New Year's. And it's listed on the market right now for $425,000. It is a 2-unit and a 2-building. And in San Diego County, the 2-building is such a big difference between the stacked or the tandem duplexes where you're sharing everything. To have the autonomy of 2 separate units is a really big deal. And this one's got that. And it's also got some character too. So it's a little bungalow style setting. And before going into the photos, I just want to show you some of the fundamentals down here. Now, take a look at it. The first unit is only a 1-1, okay? Now, check it out. They're only getting $400 a month for that little guy. Projected rent, they're saying they're a little under market right there, and that might be fair. But one thing right here to pay attention to is no laundry hookups. So if having laundry in your house or your renter's house is something that's important to you, which everybody knows this might not be the right one for you. However, juxtaposed from that, it's got a garage. And that's 6 of one, half dozen the other. Because when the lot size is only 4 to 7 or 8,000 square feet, not often do you get a garage and a duplex on one lot. And this one's actually got it. So that's pretty cool. Now, so breaking down the math here, this jumps out at me as being the BS meter popping off the chart. They're saying this 2-1 right there in the heart is only pulling in $800 a month, but the projected rate could be pulling in 2 Gs. Now, I know real estate is dominated by the bigger fool theory, but I've got to believe that's a little lofty. So when you're scouring through these residential incomes, try to pay more attention to the actual rent, because that's what market is actually bearing. Okay, and read into the projected rent, because there's definitely some validity in that number. But again, steer clear of that being the word of God, because for you to roll in there and all of a sudden start peeling back almost $2,700 a month in rent, and you're basing your financial investment around that, that might be a recipe for disaster. Now, real quickly, you'll notice down here the gross scheduled income, or called the GSI, and the GRM. Now, there's predominantly 2 different ways that you can approach residential income producing property in qualifying it. Okay, now you've got the price. You're always working against that because that's how much you qualify for. But over here on the left side, you've got the gross rent multiplier. Okay, so basically what that's doing is it's taking the the amount that the house is either going for or went for, however you want to shake that off, versus how much it's pulling in either a month or a year. And some investors, what they'll do is they'll do these numbers forwards or backwards to try to get an idea about how much they think the property is actually worth. Okay. Now, on the other camp, you've got your cap rate. And cap rates are more widely used because you can use it in all kinds of different arenas, more widely adopted as a way to try to qualify the viability of the investment, okay? And it's very similar in that regard. It's taking into consideration the amount that it's costing you to hold the property and service it versus the amount that's taken in. Now, the big depictor between these two on whether they're going to be viable options for you to qualify properties is what the GRM leaves out, the cap rate accounts for. The GRM just kind of gets you in the room, okay? But it leaves out the really important carrying costs, okay? Now, these are the actual expenses that go into actually, holding and being able to maintain the property. And where the cap rate will include those. So this might get you in the room, kind of get an idea about how you're trying to estimate for value. But if you're actually going to use one of or two of these different equations to qualify whether or not this is a good number and at what number to come in at, try to steer more in the direction of the cap rate because you're going to be safer off in the long run. Okay? Now let's get into here. Check out some of these photos. You can see this is a cute little bungalow style right in the heart of San Diego. You just can't go wrong with that. That look, and we'll get into where it is in the back. So it's even got a little exclusive use yard, which is fantastic when you're already compromised for space. Looks like they're using that wisely. Now, I can't speak to what in the bleep is going on in here in two capacities. One, if that was my house, my God. But two, man, you want to talk about trying to make it difficult for this agent to sell this house. That is a showing nightmare. Just, you can't even see the walls, for God's sakes. But anyway, we as qualified distressed property buyers, of course, we are very gracious with the owners and being able to take us in there. And we look past all that stuff and we see the value anyway. And again, another great shot of that exclusive use yard. Now, here's something that's really cool. Now, these old style bungalows, they got the either, the classic tray ceiling or the rounded corners. This is actually a very specialized type of ceiling that you'll only find in this, early quarter century style construction. And I'm partial to it. I think it leaves a great character and also opens up that room because it's really small, not a lot of square feet. Opens it up and makes it feel a little bigger because it's got some dimension and some geometry going on up above. But something to take a look at here, and what the photos obviously reveal, is there's some issues going on there with the roof. And I'll get to that actually in a second, but I'm glad they made that photo. And the kitchen is in desperate use, need of some upgrading. There's a little bevel right there in the ceiling. They put another little feature in the bungalow look. And, crowded spaces for sure. Now, what I want to do is I want to try to take a look and see where this little baby is. So there we are down in the heart of San Diego, and you can see as you fall in close there. So quickly, here's your purview of what the heart of San Diego looks like. Okay, so up around here you've got Mission Bay, and then here's the main artery which knives through the heart of San Diego, and that is Interstate 8. Now, the heart of San Diego is broken up very well by its freeway system, okay? And it's got some very important north-south arteries that run down here. Here's the 5, here is the 163, here's the 805, and here's the 15, okay? Now, the reason why I'm bringing this up is this is a very important measuring stick for value. You'll notice, here's our guy right there. So these are almost like the railroad tracks, kind of, as you go from west to east. Okay, west of the 5 is obviously the best real estate, arguably. I'm generalizing, of course. And then as you go in from the 5, the next reference point's the 163, okay? And then 163 to 805. And then basically the 15, this is a very important measuring stick east to west. You go east of the 15, it's very different than when you're west of the 15. You'll notice that this guy is actually over here in the secondary tier. He's even west of the 805. So let's cruise in on him now. And what you'll notice right off the bat here is its proximity to everything that you want and love about being in the heart of San Diego in the North Park community. So there's that little front unit there that you saw. Here's the main unit. Here's some exclusive use yard back there that you also saw. And then there's the garage. Now, one thing I noticed real quick is take a look. That roof right there, that's a little beat up, okay? So obviously therein lies some of the evidence of the water standing you saw in the ceiling. This is just a low grade, bottom of the line, flat roof with the asphalt fire paper, torch paper, and you can even see it's coming up here with the discoloring around the edges. That baby's got to go. So factor that into your purchase price. Okay, not to mention some of the damage that you already saw. You may have to go backwards a couple percent and fix that up, and who knows what you don't even know. So that aside, what I do want to show you here is what this should mean to you, okay? So you take a look at the front, and that's a really cute little setup. But what's even more valuable is its relationship to the rest of the town. So right here, literally a half a block away, is one of the most important arteries in all of North Park. Right there, you can see this is 30th. This is 30th and North Park Way, okay? So as you turn the lens right here, okay, and all along here, you've got some of the best, or some of my favorite restaurants in town. You've got shopping and urban mecca of different places to entertain. Some fun bars and hip nightclubs and again just a really cool place to call home. Or if just for an income producing residential area, secure high paying rent. So that's that. And the only other thing that I want to mention about this property, which makes it very, very unique, is the fact that it's owned by Fannie Mae. So Fannie Mae, when they own their own properties and they're selling them for foreclosures, they often pre-qualify them under their Home Path program. And if you want to learn about Home Path, I've got a link underneath this video right now. You can click on it and you can learn all about how it's important to you. But the reason why it's so essential for approaching distressed properties like foreclosures is not just in its ability to be very easy to qualify for. There's no appraisal required. There's a lot less that the actual borrower has to prove in terms of income. The monthly payments are lower because there's no mortgage insurance. The rates are great because you're actually picking off of the best rates on the market with Fannie Mae. And probably my favorite part of all is that it's got a renovation component to it. So there's actually ability for you to take a loan and purchase the house and then actually borrow a little bit more, like maybe 20 grand or 25 grand that the lenders agreed to as viable rehab and upgrades, and you can finance the upgrades. So before you even ever take ownership, before you ever even move in after you've taken ownership, you can have the house upgraded and revamped, and you could literally walk into what you would consider probably a brand new home, all things being equal. So fantastic opportunity. Check back in with me tomorrow. I'm sure I'm going to have another hot one for you.